What's good, YouTube? Today I'm back with a weekly breakdown, and these weekly breakdowns are just to show you guys my losses, my wins, my break evens, how my typical week goes when it comes to trading. So, starting off, you guys can see I took 4 trades, with 3 of them being the easy money concept. So, I will only break down those 3. The other one, USD JPY, is another strategy that I was testing out. So, I'm not going to break that one down. Let's start with GBP CAD. First, you need to understand, are we bullish or are we bearish? So, are we looking for buys or are we looking for sells? I will draw out the previous market structure to give you guys an indication if we are bullish or if we are bearish. As you see, price is clearly making higher highs and higher lows, meaning we are in a bullish market. So we are looking for buys. We have our daily setup with our impulse breaking and closing above the highest point of the previous structure. The impulse is all one color, followed by a retracement of minimum 2 daily candles, also all one color. So now we have our setup on the daily. We will go to the weekly time frame. On the weekly time frame, we're going to draw our support or resistance that could be of influence. As you clearly see right here, this was our resistance level. Previously resistance got rejected, came back up, got rejected once again. Price finally broke above that level and could now use it as a potential support, meaning that we could have a retracement all the way to this level, find support, and go continuing the trend. Or we may just have a little pullback and then continue the trend to the upside. If we go to the daily time frame, we draw our fib in the opposite direction of the retracement. This is because we're going to measure the distance of the new impulse that will form. On the 4 hour, we are going to wait until the 61 level gets broken. So this 61 level needs to get broken, followed by a retest, and then we can put our order on the 61 and ride it all the way till TP. Right now we're just waiting for the break of the 61 level, and right here you can see we clearly had a break of the 61 level. Now we can put our entry, buy limit order right there, stop loss on the 88 or below this structure, because then it is protected, because price can in this case just have a retracement all the way till here and then go back up. So you can put it below this structure where it is protected or on the 88. I just put mine on the 88 because the structure on the daily and on the weekly was looking very bullish with heavy momentum. So I wasn't expecting price to come back all the way till the 88 and possibly go lower. Our TP goes on the negative 27 as always. I did enter this trade a bit later because I wasn't paying attention when this candle was closing. So I did eventually entering the trade somewhere right there. Let me put somewhere right here. I entered the trade. So right now you can see we are in this trade. Price has also broken above the 38 level, meaning our stop loss can now go from the 88 level to our entry level, and it now becomes a risk-free trade. So right now we're just waiting and waiting and waiting until our TP is hit. As you see, price didn't came all the way to our TP, and I even ended up closing around this level right here because it was almost the end of the day, so markets were almost closing, and it wasn't likely in my eyes to see price go from here all the way till TP. So I ended up closing somewhere around here, giving me a profit of 600 something something something. So as you can see, it ended up being a 1 to 25. Our next trade is going to be Euro GBP. We start on the daily, and on the daily you see we had a beautiful impulse to the downside, followed by a correction of minimum 2 daily candles. You can clearly see we are bearish in this case, so we are only looking for sells. We go to the weekly time frame, and on the weekly time frame you can see this previously support now turned into resistance. So price can either decide to go lower from here, or it can have a retest to this level, use it now as resistance to then gain momentum and continue the trend to the downside. We go back to the daily time frame, and on the daily we will draw our Fibonacci. Let's draw the Fib, and on the 4 hour as usual we wait until the 61 level gets broken. So right now the 61 has been broken, so usually we'll put our order on the 61 level. Let's place it on the 61. Our sell limit order, stop loss at the 88 and the TP at the negative 27. What you will see right now is price is not going to make it all the way back till the 61 level. So price ended up coming just this high before it continues its trend to the downside. This will happen occasionally, and I will give you an example. If we have like a pullback, boom, all the way till here, then we have a lot of wicks between the 61 level and the 55 level, and price decides to break the 61 with a close of the candle. Right now price doesn't have to come back all the way to the 61 level. Price can just retest, because all these wicks that you see right here, it is structured on the lower time frame. So price can just come back, retest this level, and then decides to go lower, because these bottoms that you see right here, these lows, is structured on the lower time frame. Price doesn't need to come back all the way up here to the 61 level and then drop. So if you see like wicks in between the 61 and the 50, you can put your entry order on the wicks, because it is structured on the lower time frame. Or if you just want to apply by the rules, you can still put it on the 61 level, but you risk the chance of missing out on these trades. So in this case, I had two entries. I had one entry at the close of this 4 hour candle, and I had one entry at this wick that you can see right here. So price ended up pulling back and tapping us into this trade. Right now we have entered the trade. We're waiting for the 38 to get broken. 38 has been broken, so our stop loss comes now from the 88. We can put it to our entry point, and it now becomes risk free. And right now we're just waiting until TP gets hit or we get taken out at break even. As you can see, price has taken us out at break even, so it didn't ended up hitting our TP, but I will still take a break even trade because it's always better than a loss.